me a great pleasure now to bring on board Mr. Suresh Narayanan of Nestle India to talk about how things have transpired for Nestle for the quarter gone by, his understanding of the environment, what is the secret sauce that Nestle is every time able to pull strong growth, double-digit growth, and how exactly is he planning to enjoy that cup of coffee on his table. So we'll talk all that and much more with Mr. Suresh Narayanan. Mr. Narayanan, first let's understand the big picture. Big picture from an industry standpoint, big picture for the food segment, and then we'll get into specifics of Nestle.
Sure. Thank you, Nikunj. Firstly, a pleasure interacting with you and talking with you. Let me just outline briefly the track record of the company. If you take the last 26 quarters of Nestle India performance, 21 out of the 26 quarters have been quarters of double-digit growth. If you look at in terms of the net profits, almost 15 out of the 26 quarters that we're talking of are quarters of double-digit profit growth. If you look at the return on equity of the company, it is 100%. Now, on any matrix of the strategy, penetration-led volume growth, if you take the last 6 years or 7 years into account, we have had an average organic growth of about 11%. Almost 7 to 8% of that has been volume growth. And it is that penetration-led volume growth that is the core strategy of the company also going forward. Why do I put it in that context? I put it in that context because many of our categories still enjoy the benefit of low penetration. A Maggi noodle, for example, has got an annual penetration, which is consumers who buy it at least once a year, of 80-85%. When it comes to a monthly penetration, it is 40-45%. Similarly for coffee. Again, annual penetration much higher, monthly penetration much lower. And the second phenomenon, Nikunj, which is now becoming exciting for us, is Bharat is discovering the brands of Nestle. So earlier, we were, as you would recall, largely a metro and a mega city company. Today, we are into the lower town classes, TC1s, TC2 to 6, and rural India, and enjoy about 20% of sales coming out of these rural markets. And in the last 8 to 10 quarters continuously, we have enjoyed double-digit growth across all these geographies. So, Bharat is discovering the Nestle brands. There is secular growth. The last 5 quarters of the company has had double-digit growth across each and every category of the company. That's something that I'm extremely proud of. And also across geographies. So it is not that one geography is growing and another geography is declining. All geographies are growing quite well as well. What is concerning today, or what has been of concern to us in the recent past, has been food inflation. I think that is a factor that in some sense has dampened the overall kind of enthusiasm as we go forward. Now that is somewhat getting under control as we see it going forward. Again, we still have a few imponderables, but I hope, like an internal optimist that I am, that we come out of this sooner than later, that the volume prospects and the growth prospects will be much better for this company.
Okay. If I look at the volume growth versus value growth, let's take the pricing part aside. If one has to strip the pricing uptick aside, what has been the like-to-like growth then?
Look, if you look at it, 2016 till 2021, our average organic growth has been about 11%, out of which 7 to 8% has been volume and about 2 to 3% has been pricing. 2022, we had a 14% growth, of which 10% has been value and 4% has been volume. If you look at the first half of 2023, we've had about an 18% growth, the sales growth of the company, of which about 4 to 5% has been the volume and mix-led growth, and the rest of it has been pricing-led growth. What is important to remember is that except for a few of what we call the price-sensitive packs, the rest of the portfolio is growing at double-digit in volume terms itself. If I look at, for example, value-added noodles growing at double-digit, if I look at coffee growing at very high single-digit, if I look at the milks and nutrition portfolio, high single-digit, if I look at the chocolate and confectionery, high single-digit to double-digit. So the sensitive price part is the one where there has been a bit of decline, but there again, the trend since the last quarter of last year has been positive. So on an index basis, if the price point packs in categories were selling at 100, in the first quarter of this year, they moved up to 160. And in the second quarter of this year, they moved up to 180. So they're also coming back in terms of the volume growth. So therefore, as I see it, what we have faced is a phenomenon, an inflation-led phenomenon that has been true for the last couple of quarters. And what is important, Nikunj, is also not to just look at volume. The health of a brand, the equity of a brand is based on the number of transactions. How many times are consumers buying your brand? Whether they buy 2 grams of it or 20 grams of it comes later. Whether they buy your brand at all is the strength of the equity of the brand that you establish. In that context, the transaction growth is about 1% or 2% higher than the volume growth also that we have as a company. So I hope I've kind of cleared the smoke as far as the volume and the picture on the future is concerned.
For those who are saying that Nestle India has become mature and has hit a mature curve, should we remind them of your announcement of 4,200 of capex which you are planning and expanding your capacity, and that is not a guidance but that is an informal guidance from Nestle?
Look, Nikunj, absolutely. We have invested till the first half of 2023, 2,130 crores. If you recall, from the inception of the company till 2020, we had spent about 7,000 to 8,000 crores in the last 60 years. 2020 till first half of 2023, 2,130 crores. 2023 first half till second half till 2025, 4,230 crores. If I am a mature company, if I am a doddering company as far as growth and future prospects is concerned, do you think I am going to commit a 6,300 crore of investment, which is a significant investment for the food processing sector? It may be small for some of the other sectors. For the food processing sector, it's a significant investment. Would I be chancing my arm and putting in these kind of numbers to look at? So therefore, I think I always respect the views of different people, and I always learn from the positive comments and from the positive criticism of others. But I think this is a little bit unfair and unfounded to think. I in fact feel that the time of Nestle has just come. As you go to smaller towns, when I go to a Banaras or when I go to a Gopiganj, and a retailer says, "Log KitKat naam se mangte hain, log Nescafe naam se mangte hain," that gives me hope for the future. That was not true 5 years ago or even 10 years ago. Today that's happening. Today when I go to a rural distributor, he says, "Sir, sadake itni achhi hai that I'm able to make the distribution mapping of mine in a matter of hours rather than a matter of days. And today the outlets are stocking our products." That gives me joy. And that is I am ultimately, first and foremost, I am a salesman. That's where I started my career. So therefore, I always take the pulse of the market by going and talking to the Lalaji and asking them what is happening on the brands. And they tell me that there is good news. And in fact, that is the whole reason why the whole strategy of the company is focused the way it has been focused for all these years. And that is what gives me the hope for the future.
Actually, sophisticated number, Mr. Narayanan, that is the return on equity, ROE. Asking this for the benefit of our viewers. FY22 ROE 108%. FY23, 103%. And according to brokerages, it could slip way below 100. Why is that? And if it is true, can you explain the technical aspect behind this?
Look, I'm afraid I will not be able to explain it as well as you guys have. I can only tell you that if there are significant investments if there are significant investments going into capacity creation, there would be some amount of debt as well that will start to come in, and I think there would be a consequence of that as well. But I think we can have a more detailed discussion on this in terms of the mechanics of why it should be X number and not Y number.
40% of your total business, sir, is in milk products and nutrition. There is an unprecedented milk inflation. What is the impact of that? And second, at a time when in general the growth rate in India is plateauing, it is certainly not expanding like what we saw, could that be a mega trend which could impact your future business?
Look, I think overall economic growth, you see, one of the things typically in very mature categories with very high penetration levels and where the number of incremental households that you can get for your brand is relatively limited, you correlate yourself with GDP growth. So you say, if GDP growth is 6%, my growth should be 1.5 times GDP growth, which is 9%. I think in the case of Nestle, I have still not allowed that thinking to get into the context of the company. So I do not index myself on GDP growth, whether it's 6% or 7% or 8%. For me, the reality is that the penetration of my brands is still relatively low. If the brands have got equity, promise, and something to offer competitively, there is an opportunity that I have to access the consumer. How well I do it in terms of brands, in terms of equity, in terms of the 4 Ps, and in terms of access models, if I'm able to get that successfully, I think that is the track record of the company. So therefore, I am not for the moment getting myself under the weather, looking at whether the IMF or the World Bank or whichever agency predicts a 6% or 7% or an 8% growth, because I still have got headroom for growth. And once I become in the category of very mature brands in this country, which enjoy, and maturity for me is a 90% plus penetration, that is when I would start to do the econometric modeling of GDP growth versus the growth of the company.
That's a great point. I'm just going to break it for our viewers. What Mr. Narayanan is saying, that even though we know Maggi, we've grown up eating Kit Kat, we know the food business, but in terms of what the penetration levels are, they are nowhere close to what they look at, the real penetration level of 90%. We are nowhere close to it. So what is the highest category penetration for you, Mr. Narayanan, and what's the lowest for you?
At the moment, the highest is Maggi at about annual penetration of 80-85%, and possibly the lowest would be coffee at this stage, about 30-40%.
There are media reports that Nestle is looking at expanding aggressively in the packaged food category, sauce plus ketchup, packaged ready-to-eat food. Is that true? Is that something you're seriously considering via an acquisition route?
Well, we already have a fairly strong prepared dishes business, which is alluding to all the areas that you're talking about. I think we are aggressive about it, and capacity creation. I mean, if you look at our Sanand facility has been created for noodles, and now the facility in Odisha will also be created for noodles and chocolates, and similarly Sanand also will expand into other categories. So there is already a very healthy confidence and capability that we bring to the table as far as the prepared dishes is concerned. And yes, if indeed there is some good proposition that is available to us that fits into both the context of the capability, the culture, and also the expansion that we can have through synergies, why not? It's something that we are certainly open to.
What are you tilted more towards? Acquiring a big brand with non-India presence, or acquiring small brands and then using your brand and distribution muscle to scale it up?
Well, it all depends, Nikunj. It depends on the kind of brands that come our way. There are some brands which are capable of being leveraged significantly using synergies that we have got today, and that can give us a healthy business model as we go forward. There are some brands that are relatively small but are in very nascent categories where we see a consumer journey that is happening, and those could also be brands. So we look at both. It's not that any one is privileged over the other. It depends on where the penny drops and where is it that we can find the greatest value and unlocking as far as the company is concerned.
Mr. Narayanan, one is that you are growing the penetration in your categories, and you mentioned that the rural market penetration is high. The second phenomenon at play is premiumization. If I look at the existing portfolio, premiumization, I'm assuming, would be a function of urban purchases, and penetration would be a function of rural spread. How will they both blend, and what will be eventually the mix?
Look, I think there are two trends that are happening, Nikunj, interestingly today in this marketplace. One, of course, as you rightly alluded to, is premiumization. Premiumization is happening across categories, whether it is prepared dishes, chocolates, confectionery, coffee, milks and nutrition, health science, pet care, cereals. Wherever we are in, premiumization is becoming an important element because consumers are wanting better quality, better value, better aspiration brands as far as their portfolio of consumption is concerned. That is one part. But that does not mean, and that is the interesting part, that does not mean that small town India or Bharat is also only looking at price point packs and low value packs and low unit price LUPs as they were called. It's not that small town Bharat is looking at that. In small town Bharat as well, there is a premiumization journey that is taking place. They are moving from single packs to multi packs. They're moving from multi packs into premium brands, and you're finding that trend. I mean, if I can go to a Gopiganj and find Kit Kat being picked up by the consumer by the name of Kit Kat, that tells me that the premiumization brand journey has also arrived in those towns. And that is the exciting part of India, that Indians are discovering new tastes, they're discovering new dimensions, they are willing to put some money out for trying it. Now, whether they buy it on a repeated basis and whether they make it part of their repertoire of long-term consumption, time will tell. But today, that proclivity is there. That is what makes it exciting for Nestle.
So if I look at the current setup, the raw material setup, milk prices, edible oil prices, they have been on the lower end, and yet you've managed to expand your margins for the quarter gone by. If inflation starts declining, and if that trend, let's say, persists for another 2 or 3 quarters, then are we looking at a bumper expansion in margins, or somewhere you would be tempted to cut the product pricing?
Look, I think it's a bit premature to talk about whether we can take price cuts or not price cuts. If you look at the commodity scenario today, wheat, while stable, we still don't know what the ultimate outcome will be because it's also determined a lot by what will happen as far as the future winter crop and others are concerned and how the spread of the monsoon will be. Because still, as you know, there has been a lot of erratic behavior as far as the monsoon adequacy in parts of the country is concerned, where some parts have received far more and some parts have received far less. So that's still a phenomenon that is there. Milk, we've had a serious imbalance during the COVID period. The milk herds have been depleted because there was a huge dip in the demand for milk during the COVID period, and now it has started to come back. The milk herd has not been replenished fully. The cost of production has gone up substantially. Feed costs are up, and thirdly, we had the lumpy skin disease that also took its impact on the milk herd. So milk also is something that we have to watch the space because the demand continues to be strong. And the question is now, how far will supply be able to beat this? Coffee prices are up anywhere 40 to 60% in the last year, year and a half. It's looking northwards, not looking southwards so far. So in overall terms, and of course, we have got a whole lot of other products like tomatoes and chilies and lime and various other things which are going through the roof. So food inflation hasn't been fully contained. So I think we cannot take premature calls on saying what the future is going to hold in terms of the pricing equation. As far as today is concerned, the situation is better than last year. That much I can tell you. And part of the reason for the margin expansion is also that the underlying inflation. Going forward, I still have my concerns, though it will be not as serious as it was the last time we met a couple of quarters ago, when in 2022 it was fairly severe, because the 19, 20, and 21 inflation was less than the 22 inflation for the company. This year, it definitely is not near those kind of highs.
I'll just wrap it up with a couple of last questions. And I've had the pleasure of tracking Nestle for almost 2.5 decades now. And each time I've seen a commodity uptick, Nestle has only emerged stronger. They gain market share. And when commodity prices, they go down, they're able to retain some price hike because of customer acceptability. Will the same factor be at play whenever the commodity cycle will settle down? Your margins naturally will move higher because consumers are now happy to pay and digest certain price hike, which is great news for the company.
Look, I think, Nikunj, we don't, and I don't, and my leadership doesn't suffer from the arrogance of any illusion of brand power that we might have. I think we work very hard to ensure that the consumer gets the best value. The consumer is astute, and the consumer is very clear. If the brand is giving me the value that is being charged in terms of the price, I buy it. If I don't get that value, I'm sorry, I will not buy it. And I think those of us who suffer from the arrogance of assumption on consumer behavior are going to fall on the sword of weak results because they have assumed one too many assumptions as far as the consumer is concerned. So I don't think that equation necessarily holds true. What we try and do is to ensure that in every brand, we offer the best value to the consumer, keeping in mind the quality, safety, trust, and reliability that we build into every grain of the product that we sell.
Now, last but one question. I'm going to take the clock back, 3 years back. We interacted during COVID. And it was absolutely incredible the way how Nestle kept their supply chains going despite the lockdown. That was a different challenge. Then came the 2001 to 2000 period where inflation was a challenge, which you've migrated and you've mitigated very, very smartly. How do you see next 12 to 18 months now moving for Nestle? Because last 3 years, there have been very unique challenges like never before.
Look, I think we have built in a lot of resilience. I think if I were to define one characteristic of the organization, it is resilience and dedication. I'm very proud of the team that works with dedication, with resilience, with anticipation, and with humility at all points in time. The future can never be taken for granted. Success is ephemeral. It's here today, gone tomorrow. And therefore, we are very, very conscious of making that happen each day. There is an outlook of confidence. I mean, the fact is that all the core numbers that I shared with you are showing numbers in the right direction. We are putting in our money where our mouth is with a 6,000 crore plus investment coming on in the next couple of years. New capacities are being created. New digital technologies are being invested in by the company. There is a whole analytics framework called Midas that has changed the tone and tenor of the organization in terms of empowerment and enablement at the front line. We continue to be a diverse, respectful, and inclusive company. This is still an essential part of the organization. And above all, Nikunj, what I'm very, very proud of is we have a unique culture, a culture of dignity, respect, trust, and hard work. We all are in it together. We work together. Hopefully, by the grace of God and the blessings of the consumer, we will continue on this path for the next 12, 18 months and beyond.
Final question, sir. When the new capacity kicks in and when the new plant kicks in about 2 to 3 years and 3 to 5 years, which categories will see the maximum investment in terms of creating scale and size? Because you would be diversifying, or would you be expanding in the same lines? I'm just trying to get a sense of next 3 to 5 years within the Nestle portfolio. What are you particularly excited about?
I think substantial part, Nikunj, will come from existing categories and significant expansion. So milks and nutrition will see a significant expansion taking place. Coffees are seeing a significant expansion taking place, almost more than doubling of capacities today. The prepared dishes is also seeing a significant expansion. For chocolates and confectionery, we are going beyond. We have at the moment a single factory, which is Ponda, that makes our chocolate and confectionery. We are opening up Sanand for a new confectionery plant. Taliwal in Himachal has also got a confectionery plant. Odisha also in future could have a confectionery plant. So really across categories, there is a clear expansion, because I always believe that while one should look at new categories for growth, one should not lose sight of the fact that the core is the dal roti of the company. And that is where, if I see an opportunity, I should be fully on top of it and ensure that it happens 100%. So that energy and focus will not be diluted as a consequence of anything new that we'll be doing as a company.
Well, Mr. Narayanan, it's such a pleasure to talk to you. And each time I talk to you, you just surprise us with something new from Nestle. The playbook in terms of expansion, culture, the brand, the power of resilience. I mean, very few companies in the world today can claim that they are over 100 years old and they are still feeling young. And that's Nestle India for you.
Thank you. Thank you, Nikunj. Thank you always for your kind words, for the support. And I also wish all your listeners the very best for the balance part of the year. Thank you very much, Nikunj.
Thank you very much.